Okay, good afternoon, guys. Well, here we are again on this Thursday afternoon. Well, I guess Thursday morning. Another live trading clinic. We've got the Bank of England rates at 12 o'clock. Not really expecting much fireworks, and again, not many fireworks from the ECB, I guess. But we never saw any fireworks, from the rate change in ECB. So just what you read in the media and the press doesn't mean anything, to be honest. Just because the press and the media think this is going to be a non-event doesn't mean it is. We're coming into really interesting times right now. Reading a few articles, from the so-called experts. I'm one of these so-called experts. I speak to journalists every day, pretty much, telling them my opinions. If you listen to me, I told you interest rates were going to rise. I told you this on FX Street a year ago. So, if you invested in the pound, then there we go. We're at 6 months highs against the 6 year highs against the dollar. Excuse me. So, again, none of these things are new. What I'd like to say probably today is that although there won't be much change in the or any change at all in the headline rate or even the asset buyback amount, it's not really about that. It never is about that. It's about reading between the lines. If anything comes from the press statement, if anything comes from, that's kind of interpreted later on. We know that, the Bank of England generally don't come out with surprise interest rate, hikes or cuts, but I think we're all in agreement now that house prices once again, hitting the 2007 highs, just getting out of control. I just simply cannot go into this again about how bored I am of talking about, people using houses as an investment, and everyone's in the same boat. If you're a certain age and you've retired early, you've made money in your properties because you bought in the 1780s, you don't know what to do with your money. You don't trust the bankers, you don't trust pensions, you don't trust anything. So you buy what bricks and mortars. So if you get to a point, if you use houses investment as a physical investment, then people are going to cash in, and then the price is going to massively fluctuate. Things don't go up forever. Nothing does. And it's not going to carry on going up forever in London. It just physically can't. So it doesn't matter if it's going to be 5, 10, 15 years. At some point, there'll be some sort of correction. It'll come from the top. It'll come from the bottom. It'll come from, people inheriting houses and you're just getting rid of them at any price. They won't come. If you've seen your mum and dad sit in a house that they bought for 100 grand, it's now worth 500 grand, you get that house, what are you going to do? You're going to sell it. You're not going to live in it. So there'll be a point when all these things tip. It's boring. It's absolutely boring. And if people think it's going to be any other way, then they're just deluded and stupid. Not going to pull any punches. I never do. We built our houses, our literal houses, on sand built upon other houses. That's how I see the market. Okay? It's always going to happen. All these things are cyclical. Everything that goes up will come down. It's just to what degree. This doesn't change in history and never will. There we go. That's my pre-webinar rant over. But, this is nothing new, guys. I don't think anybody can... and I've been saying this for so long now that, it gets a little bit frustrating that, again, you start to read it in the papers now, and somebody, and people think this is a new thing, a new phenomenon, a new event. These things have happened, every 20, 25, 30 years, since time began. So nothing new here. Anyway. Risk warning. Remember that spread betting and CFD trading carry higher risk or capital and penalty losses that exceed your initial deposit. And they may have a suitable for everyone, so please ensure you fully understand the risk involved. The information is provided here under no circumstances considered an offer to invest. Nothing here should be considered investment advice. Information provided is believed accurate to the date it is produced. Education only. Content of the webinar is personal opinion of the moderator and intro.com. Content is not constitute financial investment or tax advice. You're advised to discuss your specific requirement with an independent financial advisor prior to any bet. And intro.com accepts no liability to the content of itself. So what we're going to go over? Well, live charting analysis. As we all know, guys, the markets are having a bit of a sell-off. Surprise, surprise. Some sort of correction was due at some point. We've hit the highs. I'll go through some key technical levels. I put some levels and the low of the DAX on Twitter earlier on this morning. So if you don't follow me, then you've missed out on that, unfortunately. Multiple time frame analysis. I can show you why the markets are correcting. We don't know why, but I can show you from a technical perspective. Fundamental analysis. Again, we've got the BoE rate decision at 12 o'clock. That's what we'll focus on right now. And then again, if I see anything decent, I will trade. Live question answers. Again, guys, these sessions don't work without you. So ask me questions. Keep putting them through the chat window. Anything you want to ask on any product, just let me know. So we've got the FTSE selling off. You can see way below these hourly fibs. So we know the market's massively negative. Again, you see the 50% here where the market tops out. Bang, 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 bang. Get to the lower level. Lower resistance becomes support. And as I said, remember in trending markets, all the levels that you see, instead of support and resistance, don't call them support and resistance, call them bob levels, break or bounce. The market gets to a significant level when the market is trending. It won't bounce off them. It will break it. So again, we've broke through these key levels, 669.980. So what's next in the FTSE? We'll carry on, 649.7.5. So quite a way yet to go before we find any kind of significant bounce. But with the FTSE, again, we didn't reach 7,000. We reached 10,000 in the DAX. I'm amazed we haven't reached 10,000 in the S&P. But again, it just goes to show that what goes up will come down. Obviously, on the back of the fears and some comments out that investors are naive, blah 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 blah, from other people in world central banks, gold's taking a bit of a spike. And we know how to trade gold. Again, don't have to tell you again. There's the spike. Yeah, hourly candle. So as long as we stay above that 50 and 61.8% in the coming hours, a new high is going to be made in gold. Where's your resistance? Well, resistance points are here. So carrying on up, we're going to get to 1346.78. Above that, we're going to get to 1352.83. Very, very easy. Again, very, very easy. Fibonacci. Again, just writing the Fibonacci part of my book. I'm pretty much finished now. I've got about another 3,000 words. So, I'm 31,000 words in, another 3 to go. So I've just done Fibonacci today. And it amazes myself how I try and kid myself, and I try and find new interesting ways and bring things that are new. There's nothing new. Again, you can literally do everything you want based upon Fibonacci retracements and expansions. Again, these rules are absolutely great. Love them. 50%, strong extended move. The market's bullish, broken out the Bollinger Bands. What's it going to do? It's going to come back into value. That's the 61.8, the 50%. We hold above that, then we're going to have to make a new high. It might be why one tick, but then all this is a great buying area. If we get back down, close below the 50%, where do we target? Where the move started? It's great. The simplest things in life are always the best explanation. Okay, so it's all about understanding your fundamentals, which are the fear in the market, the uncertainty, and then the correlations between the stock market selling off. Then people look for a safe haven. Gold is that, and then that's it. Trade the simple technical analysis that works time and time again. So 6-year highs and the pound against the dollar, as I've said, obviously it's a bit of profit taking, but nothing. All we've done is retrace, this move here. So I guarantee from the high to the low, we're going to see 50% as being some sort of key decision point. Yeah, Market then breaks through, looks to test back, can't close above it, comes back down, and we're going to probably make some new lows before we then find some buyers to push the market back up. Again, tying the fundamentals, tying the technicals. This is what trading's all about. My 80-20 rule, which is absolutely pivotal in any trading decisions you do. The markets will trade 80% of the time technically, 20% of the time fundamentally, but any fundamental move will trade in a technical bias. It's all part of the same thing. You can't discount the news. You can't discount the underlying fundamental sentiment. You just can't. It's all part of the same picture. And that's what we have to kind of really focus on. So I would say from here, I don't see this. I see a bounce. You have to look at the dailies. I've been quoted in Financial Times, Bloomberg, Reuters many times over the last few months about dip buying. So every time we see, the markets try to close these daily lows, we see these whips. So you see good buying opportunities. Are we finished with dip buying? Don't know just yet. You'd want to see some digging back into the range from this, but we're outside the Bollinger Bands now. So for a short time, that might be a day, it might be a couple of days, the trend is certainly down. Because again, look, once we broke out all these dip buying opportunities, if the markets then close and retest areas like 669.980, which was a support, which has now become perhaps resistance, if we then hit up and then the market comes down, then we've got a long way to go. 649.750. Quite easily could be a lower target over the next kind of couple of days and weeks trading. But again, once you you can do the Fibonacci, try and predict where the low of this day will be, and then try and picture a retracement point of 50%. I don't know if that's going to work on the way down so much, to be honest. What I would rather say is that once you've found a good solid trend, then you need to go back in the chart, see what's happened before, and then what happened afterwards. So significant low here, significant high. So if the market's going to get down, where's it going to hit? 50%, 61.8. Is there any surprise that as I put that chart on, with the low of this daily move is the 61.8? Is there any surprise? No, I don't think anybody in this room is surprised in the slightest. So that breaks. Okay, then we've got nothing but the 100% to get to. So on the dailies, we're looking massively negative. So a really big pivot point at the bottom here. So if we can't find some bulls to push the market back into the daily bulls, back into the hourly short-term buying momentum, then the stocks are going to get absolutely annihilated. And there's nothing. No lines of support, nothing between here and here. Okay, so everybody who's long, in this part here, will be taking the profit. Once we break into this area here, all these longs are in danger. Yeah, then we get back. The next logical terms are all the way down here. So I got a bit of stick on Facebook when I said that the markets, when they finally did correct, it'd be a very fast move. Kind of a flash type crash in a few days. We go significantly down. Some muppet on Facebook said to me, you don't know what you're talking about, Steve. There's new regulation in place that says you can't do this. Can't do what? What, the markets will close if there's too much selling action. The market's closed anyway. That's not down to regulation. That's nothing new. Okay? If you close the markets because there's been too much selling action, what does that tell you, the trader? That you're worried. Are you going to then buy the market? No. When the market opens, you're going to sell it more because you've got confirmation. So, of course, the market moves on the way down a bit over-exaggerated. Why is it what the people have never traded? People that work in compliance, the people that just have a desk job. They don't understand the rules of trading. If you give a trader a guaranteed bit of information, they're going to work on it. If you close the market because there's been excess selling, what are you going to do? We're not going to buy the market when it opens. No, you're going to sell it. Then it's going to gap and go even further down. So regulation isn't going to stop short selling. Regulation is not going to stop the markets correcting. You can't stop a market functioning. You can't. Okay. Yeah, we're a free market economy. So if it's going to sell, it's going to sell. Simple as that. So regulation has no place. Just European bureaucrats that know nothing about nothing, trying to get, their foothold on the world stage and say this illusion of power or in control. Yeah, there won't be any crashes where we move 1,000 points in a day because, we stopped that. We'll just stop trading. Okay, well, it'll move 2,000 points in 2 days. So when you open the market, it'll get smashed again. Obvious. Anyway, gonna try and keep it calm, guys. But there we go. Yes, so further downside room, and then your fib level here. You've got short-term pivots based upon this candle here. So it's like catching pianos. Pick bottoms, you get smelly fingers. If you think you can pick a bottom of this market, good luck. For me personally, if this starts going down, then there's absolutely no point buying. No point buying. So again, look for that gold formation, and again the lows in the pound versus the dollar. So somebody wants to look through. Hamashi wants to look through the dollar yen. Okay. Yen. So look at the dailies. So the dailies. Yeah, I mean, we're ranging. Okay, we're making lower highs here. So on the dailies, so it's looking like we are, getting to a negative sentiment. Towards the lower the Bollinger Bands on the dailies, we've found nice support. So this wick and these lows to aim for, I'd say a break of 101 spot 200. Certainly the next target is 100 spot 816 on the dailies. So although we're negative on the day, with the lower highs here, it's looking like we are fairly negative. View that on the hourly, well, I mean, again, time and time again, Fibonacci, again, we reject the highs, get to the 50%. Look how that market loves that 50% of support resistance. Break above it, get back down, support becomes resistance. 100%, perfect resistance. 161, resistance, break above, finds the support, can't get back to the 50%, see the break, support resistance, down, down, down. So where we're going to go to next? Well, there we go. The 423 is at 100 spot 629. So ties in really with the kind of daily type level. So 100 spot 816 is the daily level, but the actual retracement of the hourly formation is further down. So I'd say if you want to sell the dollar against the Japanese yen, then we've got a lot of downward move. Okay, so a lot of downward move. If this level here, 101 spot 253, acts as support come resistance or break and acts as resistance, then we've got a good selling opportunity to here. So, 43, 61 ticks down. So plenty of downside movement, I would say, still to come in the dollar versus the yen. Well, there we go. John Savvy Savage. He's short the DAX and the FTSE. So yeah, all good news. I mean, don't get me wrong, John. We know how the markets work. There can be bounces, and they have been significant bounces. But again, if you're short, then I would rather be short than long. Again, as I said, picking them bottoms is a very dangerous game when markets are very trending and very aggressive. Okay, guys, any thoughts on the Bank of England? Do you think we're going to change from the zero point 0.5? What do you think? When do you think we're going to change? I've said for, I don't know, nearly a year now that we're going to change the first quarter of 2015. That's what I predicted a year ago. Does anyone think it's going to be later in the year? What do we think? I mean, we're talking about interest rates being between 2.5 and 2.75 maybe by the end of 2016. Is that good? How's that going to affect the average person here? Is your mortgage and your debt going up by 2.5% going to affect you greatly? I don't have any debt, so it's not going to affect me, but will not be before the elections? Well, I think so, yeah. I think, obviously the interest rates have been a powerful tool during election periods, but I don't know. I don't know if it's going to be able to do that, to be honest. I think if, they use it as a tool, it's just going to be, I don't think I don't know. I don't know, to be honest. It doesn't really matter what happens with the elections, does it? If it's Conservatives, this and the Libs stay in, fine. If Labour get in, fine. If I'm only interested if UKIP get in, because then that'll make things interesting. Because then the world will just be a completely crazy place. But if Labour get back in, what they're going to realistically change? Nothing. There's everyone inherits the same problem. So, 8 years down the line, is anything really going to change? No, not really. They're all as bad as each other. The policies are so grey. There's no blue, there's no red these days. It's just a dirty, muddy grey colour. So I don't really care who gets elected, to be honest. I don't really think the outlook for the average person is going to change. And I don't think governments, and I think governments know now that they're out of the depth, trying to control the markets. Quantitative easing is probably going to stop in October. And then, the markets have to be on their own 2 feet. We can't, go back to pumping more money. There isn't the money. It doesn't exist. So maybe people just have to understand that they have to be poor. Maybe that's just the case. Maybe just it's the realization that everyone can't be equal and we can't save everybody. And if you don't have a job and, you don't make your own way in life, then you can't have what you want. I don't know. But I would say that, yeah, I think you're right, John. The elections may play a part, but I'm just hoping for once, someone's got some balls out there and just addresses the problem, in a timely manner. So if it doesn't, then we're going to have some sort of crash and the next government are going to be left dealing with that crash. It's the same blaming cycle. If we'd have been in power early, we'd have done this, we'd have done that, blah, blah, blah. Okay, it's easy saying anything in hindsight. Do things now. Do them before they happen. Okay, Aussie dollar and the euro. Okay, well, big spike here. Again, trying to get all the shorts out. Again, the 50% acting perfectly, but yeah, we see all this kind of short squeeze happen here. We break up to the upper levels. So again, Fibonacci levels coming into play. So 423 is at 0.93493. So break below that. Then we get back to these lower regions. Not particularly sure why anyone would buy the Aussie dollar, to be honest. I would always be looking to sell the highs. And we'll go through the trends. I mean, obviously, it's been on a good bull run, but let's do the fibs from the low to the highs. So 50% bounce off it, market goes up. So yeah, I mean, again, you look at it one or two ways. We start finding support on the 61.8 here, yeah, and the market then moves up. We could see new highs, so a break above 101 spot 0775. But we're only we're very nice off the. Yeah, okay, actually, let me just make it a bit clearer. So I mean, we're looking at the monthly kind of charts, and we do, relative kind of value where the bull move started. Again, we have bounced nice off the 50%. So we have found good support on the 38.2. So if the market does, again, look for these next targets, then realistically, we could potentially find support, and get back to, parity above 1.0 and 1.1. So yeah, I mean, the monthlies especially, if you look at that in the daily view, yeah, I mean, we've got good daily support on these levels here. So again, maybe, the market's going to, in the short term, bounce So I'd say 0.9 to 680 might be a good buy to go up. I generally stay away, I'm afraid, from the Asian markets in a class, the Australia's the Asian markets. So I just don't understand them. So I just don't trade them. But yeah, we found good support along the way on this level down here. So maybe a potential dip down of, you know, kind of, 114 ticks or so here could mean a nice bounce upwards because the trend is upwards. So yeah, I would say that potentially there is a little bit more room on the upside, and if we do see a good strong rally, then certainly we could get above. I mean, I don't know how far that would be. Yeah, that would be all time highs in the Aussie if we get back to here. So yeah, interesting. Okay, interesting view. I didn't necessarily think that there was any potential in the Aussie, but yeah, I mean the technicals don't lie. So on the monthlies, the dailies, we're finding key support down here. So maybe if we do see some dips down and support from this correlated point here, then there could be a buy to moving forward. So yeah, I would say probably I'll buy short-term dips. Aussie against the euro. Well, same kind of scenario, but from the way down, market really starts to sell off from here. So again, don't quite touch the 50%, but see an indecision, doji style candle on the monthlies, and then market has moved back down. So on your dailies, yeah, ranging. So I'd say that, lower highs have been made. So yeah, again, if we make any kind of failed attempt to break to this 38.2, then sell back down, and your targets are down 1.36735, that region. So yeah, okay, if you're going to do it conversely, then the Aussie's probably going to lose some, the Euro's going to lose some ground against the Aussie. And I'd always sell anything against the Euro. So remember that, I've always been selling the Euro. But yeah, in the short term, I guess the Euro against the Aussie does look, fairly susceptible to these downward targets. So probably buying the Aussie dollar and selling the Euro against the Aussie. That's what I'd say. Okay, guys, 8 minutes or so before the Fed released this rate decision. So 0.5, it's all analysts. Nobody's going against it. 375 billion of asset purchase target hasn't changed. So really, I guess if it is unchanged, maybe it might be some little tiny bit of relief buying from the lows in the stocks. Don't know. You have to think of different scenarios, don't you? It's very difficult to say, what's going to happen until we actually hear it, because nothing's set in stone. We're 99% sure that nothing will change, but there's always that 0.1%, which makes trading interesting. And again, just because it comes in line doesn't mean to say that something won't happen afterwards. There won't be, it might not be necessarily attributed to the, to the unchanged Bank of England rates, but maybe just people take that as a decision to get out of profits or get into positions. You don't know. So certainly worth keeping an eye on. Okay, got 7 minutes or so. Anything final that you guys want to go through from a technical perspective? I'm going to look at gold. I'm going to look at cable, and I'm going to look at the FTSE, just because they're all UK. Well, gold's not, but they're all UK based, and gold is just a measure of risk. So we'll see if anything happens to gold. It's on a spike, so maybe there's some profit taking. Again, there might be an opportunity just to push gold higher. I think a lot of people are net short gold. So while the indices are kind of taking the excuse to take some profit, gold can be pushed up. I still think gold's going to hit $1,000 or so before 2015. It's getting less and less likely the longer we go on, but I still think we'll be to the lower end of towards 1,000 rather than too close to 1,400. That's for sure. Anything else, guys? Anything final? Want to go through? Well, I've got this window open. Dollar CAD. So yeah, take them levels off. So yeah, I mean, again, it doesn't take a great market chartist to know that from the start of the sell off here, again, 50% has acted quite well. So closed below 38.2 acted as a nice level of resistance. So you'd have to say in the short term that it's looking fairly negative. So your boundaries are, the 38.2 and 23.6. I would say that, again, you could probably shore it up by putting, some other indicators on. Let's try some other ones. Try parabolic ZAR. Parabolic ZAR is quite an interesting one. Again, that's developed by the same person. What is it? Wiley. That did RSI. So let's just put both of them on. So parabolics are again just what's good about parabolics are the stop and reverse is it actually calculates and puts the dot on the next calculation. So instead of RSI, which is just generally lagging, the dots actually go one dot in advance. So they try and predict what's going to happen. So we can see the market's fairly bullish underneath, buy goes up. But again, when the market then has indecision, actually this one here, okay, is not experimental, but it's predicting what's going to happen next. So because that's on top, we're seeing a bullish move. So again, what you're looking for is your 50% level on your RSI to kind of act as a target. So that's how they're going to act as support and resistance. Then we're going to get back down to the oversold territory, and then that would drag the market down through 102.613 down to your start point here and low. So again, CAD looks on the monthlies, quite negative, but you can't use that as a trade point. So if we look on the daily, parabolics are actually a buy, and again we've bounced way out of the oversold territory. So in your hourlies, again, still short-term buy. We're potentially going to bounce off the 50 mark in the RSI again. So again, just goes to show the monthly does show there is sellers and opportunities to sell in the market. But if you're trading that intraday, then what you're going to have to do is sell high. So look for a point in the market where it could break. So how would you do that? I don't know. Let's just do expansion. I would say this is a good up move. So if you're going to be selling, then what you'd look to sell is here and here. So if you're selling on the monthly because you think there's more scope to sell, that's fine. But then you have to wait for the market on the short term to get to higher points before you sell. So 106.842, 107.054. These are your levels of where you would sell. Okay, if the market got higher, expecting the overall trend of the month is to take over and sell back down. So again, while everybody else is buying, on the short term into strength, I'd be selling more into that strength, looking at the overall picture. So that's just the US CAD with parabolics R, RSI, and Fibonacci extension. Blank chart, nothing, no levels. So put what I look at on a day-to-day basis. Tells you the same picture. Okay, so breaking above the 161 extension on the hourly. So that's acts as support. We're going to get to these resistance points here. Okay, no real support very high up. So I don't think the market would get to that. So I'll be selling these resistance points to get back to the range, and 106.549 would be the 50%. So really selling into strength is what I'd be doing in the dollar CAD. Okay, simple as that. Okay, 2 minutes before the figure now, guys. So we're towards the low in the FTSE. Again, that key pivot point there. Gold's really done nothing, but again, we've got our extension points from the fib on the high side. Pound, again, looking still weak. So again, this might be something to do with the unchanged, or maybe room for a surprise. Okay, but we've got our levels in play. Okay, so a couple of minutes now before the figure, guys. So again, I'll let the squawk tell us what we're going to be expecting, which is 0.5 unchanged, and the asset unchanged at 375 billion. Okay, just a minute or so now, guys. It's over a minute. So towards the lows on the FTSE, so could be interesting. As I said, there isn't really much below that. So if you do start to aggressively sell off, then you don't want to be stood in the way of that. That's for sure. If it does start to sell off, we'll be expecting a few beer tokens, I guess, from John. Okay, 0.5 expected, guys. Rates QE unchanged. Okay. Don't panic. Okay, so at the lows now in the pound versus the dollar, so an unchanged, absolutely as market expected, but you expect the overall trend to continue if that's what the market's been basing its decision on. So Nothing really kind of twitching right now towards the lows of everything, towards the highs of gold. So unchanged in the market, exactly as everyone expected. So maybe a little bit relief buying in the FTSE, people getting out of the positions. What do you think, John? Would you be getting out of your position now, or would you be holding this into the US Open? A few things coming through in the score, but absolutely nothing of interest, guys, I'm afraid, to be honest. But there we go. Little bit of no way, John's holding. That's what I like about John. Doesn't pull any punches. Good man. Good man. Okay, well, not a great deal, I guess, to take from that data. Good, I guess, that, it's unchanged and we don't see a surprise. Markets don't like surprises. The fact that we weren't going to change rates is pretty much priced in. Overall, trend-wise, could be an opportunity around this low, I would guess, in not the FTSE. I'd stay well clear of trying to pick the bottom of the FTSE, but with the 6-year highs of cable, maybe these low points, maybe down at this low point here at 1.7, 1071, maybe a little bit below at this 423 fib level at 1.70950 could be a buy. The two scenarios, really. They either limp them back down to this level, and then really find this 423 as good support and then go up and get back to this 50 level up here. Or we'd very, very quickly break this level down to here, maybe here, but then we close within these boundaries and then be the buying opportunities. So you could potentially do one or two things. Again, like I said, you could sell the break of this 100% with a nice target and an extension to go from here. Or you can let the market do all that and then really kind of look to buy above the 161 because, again, the overall trend with the 6-year high in cable is there for everyone to see, until we close below the moving average and, get towards the lower parts of the daily ball. There's still a lot of upward momentum, again, consistent higher highs. So, yeah, we could certainly come down, but you'd expect in the short term that there's still a lot of people long. So, while people might liquidate, the overall trend could still bounce then further. And when people say that we're overbought in the pound, we're not, okay? I'll do exactly what I did before. I'll put a blank chart on. I'll tell you exactly why. These highs, these lows. So, yeah, I'll start from here. Okay, so until we get to the 50%, yeah, the market is no way done buying this market back. Okay, so we've still got to get to this point here. Okay, 13153. Okay, and then that's the 50%. So rather than get back down, make new lows, or we find support, get to 61.8, and then get back to these highs. So we've got so much more room on the upside. Okay, we're digging back down into this big, huge sell-off that we saw over the month of, late 2008, early 2009. So again, until we reach this decision point here, there's still plenty of buying opportunities. So buying low, I would say, in the short term and carrying on the overall trend. Why would you look to do anything else? Okay, guys, anything else? Anything final? Nothing, guys? Nothing else? Well, I think it's just a bit of as John said, it's time to hold. If you've got the back of the trend and you've got the back of the direction, it's time to get on this and stay short. Interesting stuff. But I'd say really now I'd be looking to buy dips in these low parts of cable. Probably a new high in gold. Gold's very directional. So what I'd see actually in gold is we're going to in probably one or two candles range, and then we'll break all these levels, and then gold in one candle will get all the way back to 133,724. Okay, so what you're going to see is gold probably make a new high and probably quite aggressively, and then just stop, and then just one red candle taking all that profit back. Gold's a nightmare for doing that. No problem, John. Well, no problem at all. But like I said, I'm going to be doing some more stuff. Now the book's nearly finished. I'm going to be doing a lot more appearances. I've had another. I've got two PR companies now, so I'm going to do a lot more stuff in London. So I'll be doing some meetup events. I'll be doing some of the big shows and conferences. So later on in the year, guys, you always know how to get a hold of me. At Steve Ruffley on Twitter or at Ruffley@tradermaker.com. So if you want to know where I'll be, you want to meet up and talk some ideas, have a beer, then guys, I'm always willing to meet up with anybody. I'm absolutely 100% approachable. All right, guys, I don't really think a great deal is going to happen. To be honest now, I'm with John. If you short the indices, I'd stay short. Look for that quick spike up and then big sell-off in gold. I don't really think gold has any right or reason to be up here. It's purely based upon, I guess, the moving indices. I've been buying the lows of cable. I just think the overall long-term value is there for everyone to see. Absolutely there to see. Oh, sorry, the New Zealand versus the US dollar. Okay, okay. Yeah, still, I mean, again, very much like the Aussie, still very much bullish, but much more when we're towards record highs here. So, again, what would you do from here? I would certainly, let's just put it in a blank chart, make it completely transparent for everybody. There's no trickery here, no jiggery pokery. So the trend, I mean, again, is a nice one. That's a nice trend on the monthlies. So if I wouldn't really do it, I'd probably do it on very, very smooth. Probably do it on this. Okay, so the trend line here, we're getting the bigger gaps. So, these highs certainly are where the market is going to look to test. Okay, but it's literally the tops. So just do yourself a nice continuation pattern if you're looking for them new highs. So just do the expansion. So from the low to what would be anyway, the all-time highs, I would do that. So we're going to break new highs in the New Zealand dollar versus the US dollar, and these are your points of attraction. Okay, because this is fairly recent from the weeklies. And again, look at that from your dailies. Okay, so your trend line, market's really, again, bouncing off these lows, again, finding good support. So we break this and then find support, then 0.9347 and above to 0.98564 would be certainly where we'd see the New Zealand dollar get to. Remember, when things are all-time highs, like we've seen the DAX, they could, very, very quickly spike, but then you quickly see a direction. So I'd always be selling into good points and new highs, because is New Zealand the way forward? Would I buy New Zealand dollars, long-term over US dollars? Tricky. I don't know. With the end of quantitative easing, who knows? Who knows, guys? The world's going to be a different place towards the end of the year. So maybe the more Asian exotic type currencies might be where people put the money, but New Zealand, it's not aggressive, it's non-threatening, it's a relative safe haven. I guess it's like the Swiss franc is, a safe haven for money, but with changes to tax, regulation, investigation, maybe New Zealand's the next place to put your money, maybe because it's so far away, people just leave it alone. So, yeah, interesting. Maybe, New Zealand is a good place to put your cash. Maybe, again, that's why the Aussie dollar's, following that trend is so strong. Again, it's all down to your fundamentals and your perception of safety and what the market's doing, guys, isn't it? All right, guys. Well, that's pretty much my time on FX Street today. Do look out. I'll be doing the monthly webinar. This month, so there's going to be a good monthly webinar, a good hour and a half, and then an hour for the premium users, all about my ultimate strategies. So Steve Ruffley's tips. So it'll be a tiny proportion of what's in the book, but it's still gold, guys. Absolute gold. So do join in for that. Anything else, guys? You want to get me on Twitter, at Steve Ruffley. If you're short the indices, as Johnny stays short, look for the lows to buy in cable, and look for that big sell-off in gold. Okay, it's going to come. Guarantee it. All right, guys, have a great afternoon. Take it easy. Thank you.